Hey, my name's Rajesh. I'm a direct lender based in Los Angeles, and today I'll be talking about two kinds of land financing, vacant land financing. The first is residential, and the second is commercial. And I'm going to illustrate the differences for you today. So let's say you're buying this piece of land, and it's got hills, and it's got a beautiful little pine tree over there, and it's got maybe even like a little pond somewhere right there, and you're thinking this would be a great place to build my mansion. So this is what would be considered, and here these are like 2 stories, and maybe you've even got like a main balcony right here, and then you've got like the main entrance right there right below, and then you've got like this huge walled doorway right there so that you can look out into the pond and enjoy your morning cup of coffee. So that would be considered residential when you're building 1 to 4 units on that piece of land. And in order to make this work, you can't just build right away. You've actually got to do something called grading. And before you even start on that, you've got to do something called mapping and entitling. So you've got to get a permission to draw a map for the home. You've got to draw a map from the home here, and then you've got to get permission from the city to be able to build on there. Once you get permission from the city to build what you want to build on there, to design what you want to design on there, that's called entitled. That means this is the property that is entitled to be built on here. This is the design that is entitled to be built on here. And then after that, you've actually got to go do the grading. That means it cannot be this slope piece of land right here, because that house is going to be all wonky. So you've got to grade it out. So you've got to flatten this piece of land out right here. And more than money, this, I'm trying to draw a straight line. More than money, this thing's gonna cost time to do. And when you get a construction loan, whether you're doing an investment property to fix it and to build it and sell it, a spec home, or whether you're trying to build it and live in it yourself as your forever home, or even just a home for a few years, what happens is if you're not going to start building within 30 to 90 days, I generally use 60 days as a rule because that's what applies for owner occupied properties, and construction loans for owner occupied properties. You're gonna default out of the construction loan because you didn't start construction soon enough, but you're going to be paying interest on that loan for 12 months. That construction loans are generally only good for 12 months, but it may take you 6 to 12 months just to get permission to do the building, just to get the design that you want onto that piece of land. And so when that happens, you're going to default out of the construction loan. So you need a loan that allows you to buy the land and hold it for as long as you need to before you can actually start the construction. And that's where residential lot loans come in. And that will allow you to, those loans are either hard money loans, they are high in interest rates and they have short terms, normally about 12 months interest only. And during that year, it's your job to make sure that you're, you know, doing the work so that you can get ready to build within a year, because normally refinancing out of that into an extension is very difficult. That means the land has not been improved sufficiently to increase its value, and it may have actually gone down in value over that year because no improvements have been done, the market may have downturned, etc. So it's usually hard to leave a hard money loan. Now there are permanent financing for land, and the ones we do in-house usually have a duration of 10 to 20 years, and they're still higher in interest rates than most real estate loans because it is vacant land and there's sufficient risk. But the good thing about those is that they are permanent financing, meaning they are fully amortized over 10 to 20 years. So as long as you make your monthly payments on time, the loan is being paid off slowly over time, and it gives you plenty of time to get this land entitled. So let's say you're 40, you want to retire and build your dream home by the time you're 50. Now you have 10 years to get the design right, get it entitled, get the permission that you need to be able to do the construction on this property, whether you get a loan or not. That's residential. On the commercial side, let's zoom out a little bit. So let's imagine this same piece of land, right? And now instead of building one single house, you're thinking, and let's reset scales a little bit right here, so that instead of building one giant house, you're thinking, let's build a community, let's build a subdivision, right? And now you can build, and this is a road, and so you got a house here, and then you've got another house here, and you've got another house here, and you've got another house here. Well, let's say you've got houses back to back here as well. So you've got houses here, here, another house here, houses here, houses, and a house here, and maybe there's another street over there. So let's go to an overhead shot. And so what this looks like as a map is, here's a road, and then you've got houses here, here. Well, if it took you a year to build a single family home, get the rights to do it and everything, entitle it, etc., assuming it's an unentitled piece of raw land, it's going to take you even longer to build multiple homes, right? So you can't just buy a piece of land and say, hey, I'm going to build this awesome community here. You still got to get permission from the city and county to do so. And so generally speaking, you got to design the roads, you got to design the sewer system, you got to design the electric system, depending on how big everything is, right? So let's see, roads right here. So you're building this huge community here, and here's the little pond around it, and here's a giant old pine tree. And so that's what you're building. So this is going to take even more time. This is going to take about 3 to 5 years just to do. If you're experienced and you know what you're doing, and you have the right engineers, the right mappers, the right civil engineers, and connections with the city, maybe 2 years. Either way, you're not going to be able to start construction right away. And while some construction lenders will just fund the purchase and the entitlements or the horizontal work, and then the infrastructure work, and then the vertical construction, many won't, especially not at the rates that you're looking for. So what you need then is an entitlement loan. As a lender, this is what I do. This is where I come in for both of them. I'm able to provide the financing you need to be able to purchase land or refinance land or pull cash out of the land based on the appraised value, and get you the funds that you need to be able to entitle it so that you can start the vertical construction or sell it to a giant developer like D.R. Horton, KB Homes, Lennar Construction, etc. So there are different ways that you can make money off of land. Most of it is buying a raw piece of land that is undervalued or valued correctly because it's just raw piece of land with no rights to build anything. You add the rights to it, which costs money and time, and then you sell it to somebody or build on it yourself. You sell it to somebody who is able to build on it, who has that experience, and or you build on it yourself. And the best people for this entitlement mapping, the ones that we generally get approved quite easily, have experience both in horizontal construction as well as vertical construction, and they've done both phases and they've done plenty of projects, but now they're at a point where, you know what, instead of doing a 50 unit development, I want to do a 200 unit development, but as a developer, doing vertical construction on 200 units is way too much for me, so I'd rather just make sure that I get this entitled, get the rights to it, and then sell it to a D.R. Horton, sell it to a KB Homes, sell it to a Lennar Construction, and make my money that way. It's a much shorter cycle for me. I'm making my money on this much more quicker in 2 years versus 5 to 10 years. So whether you're doing individual homes or entire subdivisions, I can help get you the financing that you need to be able to make this happen. Anyway, good talking to you. If there's something that you think would help you and your projects, hit me up on my website, lamortgagedude.com/vacant-land, vacant-land actually, /vacant-land, and let me just, vacant-land / and that's lamortgagedude.com. All right. So good talking to you. See you next time.